Hey traders, Todd Gordon here with TradeAnalysis.com. This is for CNBC's Trading Nation. Traders, looks like the market continues to chug higher here, and we have Apple in our sights heading into earnings on February 1st. So we can see that Apple is well contained in this beautiful 2017 uptrend channel. Looks to be that we've just broken through resistance here, just at about the $177 mark here, and it looks like we should be able to go up and challenge the upper end of that trend channel here. So we'll see if earnings gives us the boost that we need to potentially get over the 190. All right, so the trade I have set up here, before we flip over, let me just also draw your attention to the implied volatility. We're starting to get that escalation in implied volatility, which is very common heading into earnings. So you can see in the last year or so, we're moving towards the upper end of the range for implied volatility, which is very common around earnings. We can use that to our advantage by selling that expensive volatility, because unlike price, volatility is mean reverting, meaning it trades in a sideways channel. And at some point when it gets overbought, it will revert lower, which will depress the price of both puts and calls. We can use that to our advantage when we're placing our directional bet, which is higher. So the trade I like to do here is we're going to go out to those February monthly options. We're trading just at about $177 as we shoot this video. So I'm going to go ahead and I'm going to sell the $175 put just below us. I'm going to pair that up with the purchase of the 170 put. The net difference between the sale of the 175 and the purchase of the 170 gives us a credit of $1.74 in our pocket right now. $174 per option spread that we're trading. That's our total max profit. Our risk would be $326 if we hold the trade all the way into expiration and it goes completely wrong and against us. Okay, we're not going to let it get that far. So before we execute, let's go over and talk about the stop loss. If the market starts breaking back below this breakout zone, just at about 177, 178 where we're pressing now, if we start to drop back below this $173 mark, I would say this breakout is in jeopardy and we want to exit this trade before earnings. So stop loss goes in at 173. The trade right now, we're able to take in about $1.76, $176, depending on, that'll change depending on where you're filled at the time you see this video. So let's go ahead, review the trade, and that trade is now working. For CNBC's Trading Nation, I'm Todd Gordon. Good luck on that trade in Apple. Be sure to use that stop loss here as we're coming into earnings season. Things are going to get volatile in Apple as well as all the other names out there. Be sure to follow us at Trading Nation on Twitter for updates to this trade as well as all the other trades our traders are watching. And we'll see you guys in the next video update.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.